Hey everyone, welcome back to Big Markets Think Simple. Here's something that'll make your head spin. Naver just had the best year in its entire history, and nobody seems to care. In 2025, Naver pulled in $8.7 billion in revenue, record-breaking. Operating profit crossed $1.6 billion, also a record. Meanwhile, Korea's Kospi index is up nearly 160% since 2025. Naver stock up 13%. So what's going on? How does a company crush every financial record it's ever set, and the market just shrugs? Here's the real answer. The Naver you grew up with, search bar, newsfeed, forums, Q&A, that version of Naver is quietly dying. This company is in the middle of one of the most dramatic identity shifts in Korean tech history. Today, we're breaking it all down. No fluff, no jargon, what Naver actually is now, what it's betting on, and whether that bet pays off. Let's get into it. This video is not investment advice. It's for educational, entertainment, and informational purposes only. I'm not a financial advisor. Please do your own research before making any investment decisions. Any investment decisions are your own responsibility. Okay, let's start from the beginning. When Koreans hear Naver, most picture a white screen, a green search bar, and a wall of trending topics. That was the brand. That was the identity. And for a long time, that identity was a money machine. Naver was Korea's Google, except it actually won. When Google tried to crack the Korean market, Naver held its ground. It understood Korean language, Korean culture, Korean users better than any outsider could. The business model was simple. Pull people in with search, sell ads against that traffic. 5 or 6 years ago, search advertising alone was over half of Naver's total revenue. It was, at its core, an ad company dressed up as a search engine. Then something started shifting, quietly but fast. Look at the 2025 numbers more carefully. Revenue of $8.7 billion, operating profit over $1.6 billion. Impressive, but where is that money actually coming from? Back in 2020, search-related revenue was 53% of the business. By 2025, that's down to roughly 35%. Commerce, meanwhile, went from 18% of revenue to over 30%. In raw dollars, commerce grew from around $690 million to over $2.6 billion. Naver is no longer a search company. It's becoming a commerce company. Think of it this way. Old Naver was the most famous library in town. People came to find information, but then Naver quietly built a massive shopping mall inside the library, added a bank next to it, put a movie theater on the roof. People thought they were still coming to read. Turns out they were buying stuff, paying with Naver Pay, and watching webtoons. The transformation from sell traffic to generate transactions is basically complete. In 2025, Naver's shopping platform processed roughly $36 billion in gross merchandise value. That puts it right next to Coupang, Korea's Amazon equivalent. So forget asking, how's the search working? The real question is, how much stuff is Naver selling and how much commission is it keeping? Because that's the company now. But that raises an obvious question. Why did Naver have to change in the first place? Simple. Search alone wasn't going to cut it anymore. For years, Naver operated like a feudal lord with a perfect fortress. Google, one of the most powerful companies on earth, could never crack Korea. Naver just understood the market too well. But the walls started cracking. Think about your own habits. When you want restaurant recommendations, do you search Google or do you scroll Instagram or YouTube? Younger users, teens, college kids, aren't searching Naver at all. They're on TikTok, YouTube, Instagram. For answers to questions, they're asking ChatGPT, Gemini, Claude. They're not typing into a search bar. For Naver, this is existential. Fewer searches mean fewer ad impressions. Fewer ad impressions mean less revenue. The foundation of the business starts to crack. So Naver made a call. Stop being the place people come to find things. Become the place people come to do everything. Sound familiar? It should. Amazon started as a bookstore and ended up owning cloud computing. Google started with search and ended up inside your TV. Naver's playbook is similar. Get people in with search, push them to its shopping platform, capture the payment with Naver Pay, then keep them around with webtoons and content. Classic lock-in strategy. Keep users inside the ecosystem so they never need to leave. And now AI is being layered on top of all of it. HyperCLOVA X, Naver's own large language model, is being used to improve shopping recommendations, optimize ad placement, and personalize the experience at scale. In 2026, Naver plans to launch a full AI tab, not just links, an AI agent that gives you personalized recommendations across shopping, finance, even health. The pitch: Naver stops being an information utility and becomes your personal digital concierge. And look, it's starting to work. Commerce revenue was up 26% in 2025. The strategy is showing results. But here's the question the market keeps asking. If this is working so well, why isn't the stock moving? Here's where it gets complicated. The direction looks right, the revenue is growing, but the market isn't buying it. At least not yet. Why? Because Naver is trading a high-margin business for a low-margin one. Old Naver ran on search advertising. Build the system once, collect the checks. Low overhead, massive profit margins. It's the kind of business model that makes investors fall in love. Commerce is a completely different animal. To grow in commerce, you have to spend constantly on marketing, on promotions, on getting sellers onto your platform. Revenue goes up, sure, but margins get squeezed. You're working harder to make less per dollar. And the commerce market Naver is pushing into? It's brutal. Coupang owns same-day and next-day delivery in Korea, and they're not giving that up. Then you've got Alibaba's AliExpress and Temu flooding in with prices that are almost impossible to compete with. Naver is fighting on multiple fronts against world-class competitors in a market with razor-thin margins. Then there's the global question. Google and Amazon, the companies Naver wants to emulate, operate globally. Their total addressable market is essentially the entire planet. Naver, still heavily dependent on South Korea, a country of 51 million people. The growth ceiling is just lower. On AI specifically, HyperCLOVA X is legitimately strong in Korean, but against OpenAI, Google DeepMind, and Anthropic, the gap in global scale and research firepower is enormous. Naver spends about $1.45 billion a year on R&D, around 18% of revenue, which is actually high. But the question is whether that's enough to stay competitive in the AI arms race. And then there's Webtoon. Naver's digital comics platform made a big splash when it went public on the NASDAQ, but global users are down 7%. Past acquisitions are being written down. What was supposed to be Naver's global growth engine is now a source of uncertainty. But the deepest problem, underneath all of this, is the loss of monopoly power. Old Naver was irreplaceable. Want to search in Korean? It was Naver or nothing. Now search has Google, shopping has Coupang, video has YouTube, and AI has ChatGPT. Every market Naver operates in has a world-class competitor. Naver used to define its own battlefield. Now it's fighting in someone else's. One-sentence summary: Naver is moving from a dominant high-margin position into a crowded low-margin war, and doing it at the exact same time as the AI revolution is rewriting the rules. The market sees the transformation. It's just not convinced yet that Naver wins it. But here's the thing. This isn't a doom story. Naver has real reasons for optimism. Let's go through them. First, AI is already generating real revenue, not just hype. In 2025, 55% of Naver's platform ad growth was directly attributed to AI. This isn't theoretical. AI is actively optimizing ad placement and increasing revenue per impression right now. And Naver isn't trying to out-Google Google on AI. That would be a losing fight. Instead, it's using AI to squeeze more money out of the things it already does best: Korean commerce, Korean content, Korean users. It has data no one else has. That's a real moat. Second, the Saudi Digital Twin Project. Naver Cloud won a contract to build virtual replicas of 5 Saudi cities. This isn't construction, it's building the entire digital infrastructure of a country. Once you're embedded in a government contract like that, you're talking about 10 to 20 years of recurring high-margin revenue. This is Naver's most tangible step yet, from domestic Korean company to global technology exporter. That's a narrative shift the market will eventually price in. Third, Naver is getting smarter at profits. For a while, Naver was expanding in every direction simultaneously, throwing money at growth. Now it's getting disciplined. It's cutting businesses that don't generate returns. Its guaranteed delivery service and commerce is building a sustainable fee model. Naver Plus membership ties finance and shopping together, making customers sticky. Poshmark, its U.S. resale acquisition, just turned profitable. These are signs that management knows how to improve margins, not just chase revenue. And 2026 is supposed to be the year it all comes together. Naver's leadership has declared it the year of the AI agent. Every major product is getting AI deeply integrated. The shopping AI agent is already being built out. If the numbers follow the vision, commerce margins improve, AI agent drives measurable revenue growth, the stock has a lot of catching up to do. All right, let's bring it all together. The Naver behind the green search bar, safe, dominant, cash printing, that company is gone. In its place is a Naver that has left the fortress, walked into the open battlefield, and is swinging an AI sword in the middle of a war they didn't start. Revenue is record high, stock is barely moving, and the reason comes down to one word: trust. The market is asking Naver one question: can you actually build a profitable AI-powered platform that competes with Google and Amazon and make your shareholders money doing it? Naver's answer is 2026, the AI agent year, the proof of concept year. If it works, Naver becomes something genuinely new, the AI backbone of daily Korean digital life with a global tech export business growing on the side. If it doesn't, if AI agent underdelivers or commerce margins stay stuck, then Naver is caught in the worst of both worlds, abandoned its old high-margin model, failed to build a new one. So, what do you think? Does Naver pull off the transformation? If you found this useful, hit like and subscribe. Thanks for watching. See you in the next one.